Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Tuesday afternoon, we have Shawn, Cruz, manager of trader services at TD Ameritrade, to discuss Nasdaq-100 performance. We'll take a look at trends in the Nasdaq Volatility Index, as well as preview Airbnb earnings. Shawn, it is great to see you as always. Welcome back to Trade Talks. And let's start with a review and levels that you're watching in the Nasdaq-100 and trends in VOLQ.
Yeah, well, when we started to get some pretty strong selling pressure, I was interested to see if that 14,000 level was going to hold on the downside, because that was a previous support level, and it looks like it did. So then the question became, was the situation over between Russia and Ukraine going to get exacerbated, in which case would we maybe get another run down towards this level, or would we maybe get a little bit of clarity that maybe things weren't going to escalate and in fact maybe could de-escalate? And we got just that, and we rallied right back up to another level that I had been looking at, just above 14,500. So now I'm looking to see if we can get a little bit of stability there to maybe form some sort of a base, and then just more clarity on the situation in Ukraine. There was a lot of reports, a lot of headlines. They're suggesting that maybe there was the potential for an invasion to come anytime in the next 24 hours or so. I think a lot of people are looking at Wednesday. So I think that might be the one thing that everyone is keeping an eye on. But if we do get through the clear on this, I think you could stand to get a lot of that risk off behavior to reverse itself. And then you could potentially see another rally. And then I'd be looking to see how fast we can charge back up towards that 15,000 level.
And you know what, Shawn, we haven't spoken about the 10-year in a while. We've been so focused on earnings and what's happening geopolitically and with inflation and so forth. How has the 10-year been responding to this?
It was actually interesting. I think the markets right now are so hyper focused on what's going on between Russia and Ukraine that even though the 10-year broke above that 2% level, which is a level a lot of people are keeping an eye on, and actually meaningfully moved higher off of that 2%. I think now it's a little bit maybe of a good thing that there was something else for the market to focus on. Well, we had the 10-year move above there, because now the 10-year has established a little bit of a sustained action up above that 2% level. I think you're actually seeing the yields rise today a little bit more because you're getting some of that risk off trade reversing itself, and that's leading to selling in bonds. So I actually am going to be interested to see, once the market hopefully takes its eye off the Ukraine Russia situation, or at least that becomes maybe not the by and large one major thing they're focused on, that they're a little bit more comfortable with where rates are right now. I think that actually could potentially be a good thing, but now it's just a little bit more of rate stability. It's not always a matter of where rates are, but how fast they get there. So I actually think if rates just stabilize here and just trend sideways for a little bit, that can get the market to be in a position to be a little bit more comfortable with higher interest rates.
Right, and Shawn, to wrap up here, let's talk about Airbnb. It's going to be interesting the earnings to watch here, especially when we talk about the guidance and as we get to the other side of the pandemic and think about traveling again.
It's going to be a report where you're really going to look into the details. I think the assumption was October and November were actually going to be pretty strong months, and they were looking for that to really carry through into December. December is when we got a little bit of a spike in the COVID cases, and that led to some restrictions getting put back in place and maybe had a little bit of a step back in travel, particularly on the international front. And they're going to have to wait and see just how much that does impact these quarterly numbers. But even with all that aside, they're still expecting some pretty strong metrics for the quarter. I believe revenue is expected to be up about 70%. They're looking for an EPS of around 7 cents, but the market maker move right now, which sort of gives you an expectation for a range for Airbnb to be trading in post earnings, it's giving a pretty big wide a range. So it is expecting They're just implying that there's going to be a potential for a pretty sizable move after that. And I think a lot of that is because the market is really having a little bit of a difficult time handicapping what that December spike in COVID cases is really going to do to their numbers. And the guidance is certainly going to be something to keep an eye on here, because although we've had a lot of these restrictions remaining in place going into the first quarter here, it's going to be a matter of how soon they see this clearing up and what they see the demand for travel and bookings to be on the other side of that. So going to be focused on what that third month of the fourth quarter was in December, that impact on the actual numbers, and what their outlook is for travel, presuming we do continue to make progress on the COVID front and you see travel reopen more.
All right, Shawn, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.